So if everything is okay, then we will start the session. So students, welcome all of you for the management accounting session for BL6 business level 2, the existing syllabus of 2020. And this class is going forward, we are going to communicate with English only because as you know, BL6 and BL8 you can do only in English medium. Hope you remember, right? So you cannot do the subjects in Tamil medium. So it's better we will communicate in English language as much as possible, and I will use very simple English, not a very deep language. Okay. Is it okay for all of you? Because most of the students are here Tamil medium students, but I think it is okay to go with the English medium. Shall I go ahead like that? Because you have to sophisticate with the English language also, right? Because you are going to face the examination in English language, but it is also very simple language, and the same time it's only a MCQ based exam. So you don't need to worry about writing and grammar and everything. So you have to choose and drag and drop and fill in the blanks. So those kind of questions only you are going to face. So it is better we will communicate everything in English. So then going forward for the corporate level and other levels, it makes use, right? So students, if you consider about your syllabus, the syllabus is divided into two sections, volume 1 and volume 2. So there's a separate book for volume 1 and also a separate book for volume 2 also. Already I have shared the volume 1 and volume 2 official study text in your groups. How many people get that? How many people you get the volume 1 and volume 2 study text? Give me a second. I will share the group link also. So then I will share the group link right now. That is our BL6 official group. If you are actually gonna do the exams, please join. Otherwise, please don't. If you are really a student of doing BL6 exams in upcoming examination, so please join in the group right now. I have shared. So that is the official group of BL6. I have already shared the study text, revision kits, also my own notes. If you are not in the group, please join in the group. I have shared in the chat box. Right. I hope so, guys. Already you have joined the group, and if it is not, this is my WhatsApp number. If you cannot or unable to join the group, so please use this WhatsApp number, and you can message or you can call to me around 9 to 4 p.m. So me or my staffs will be answer the call. Okay. Right. Okay. So students, as I told you already, the volume 1 there's a separate book, and volume 2 there are separate books. So volume 1 it is divided into part A and part B. So the part A, it is a 35 percentage of your entire syllabus. From the entire syllabus it contains 35 percentage, And the part B from the entire syllabus, it contains 20% of your syllabus marks. And part C, part D, and part D, respectively 25% and 10%, and again another 10%. So this is how your syllabus is structured at the initial stage. And if you move forward for the part A, it's all about cost accounting. And in the cost accounting, we can see for the 35% syllabus, there are 9 chapters. So we have to get through entire syllabuses to have the knowledge of this 35%. So chapter 1, chapter 2, chapter 3, chapter 4, 6, 7, 8, 9. So these chapters are like introduction to management accounting, cost classification, and accounting for labor cost, and accounting for overhead, pricing, and integrated accounting, job, batch, contract, and service costing, as well as process costing, and also marginal and absorption costing. So if you are a student from a AAT background and as a AAT pass finalist, you know this introduction to management accounting or cost classification. So how to calculate the labor cost and overhead absorption sheet and statements, pricing, markup pricing, right? Cost based pricing, margin based pricing, or integrated accounting also it is in AAT. Even job batch contract and service costing are a little bit we have a touch in AAT also, and process costing absolutely in management accounting of level 3 of AAT, and marginal and absorption costing also there. So normally these cost accounting areas are, you have the basics if you already did your AAT examinations, but the testing methodology will be different. Okay. So sometimes students, you can wonder when you are doing the questions, even a simple questions like, the difference between the financial accounting and the management accounting, even that simple question, you might do some mistakes in the CA questions. The issue is they will test very deeply in the study text, how they have mentioned the text and how you have understood, it will directly affect on your answers. So you will see in the pilot papers and also revision kit questions. I have a plan to do revision kit questions also in today's session. So please be with us for the entire session. So this is your part A, 35% of your syllabus. So if you want to take a 35% of your marks, you have to know chapter 1 to chapter 9. Okay. And the part B, the planning and controlling part. So here the chapter 10 and 11 is involved. So the chapter 10 is all about standard costing and variance analysis, AAT level 3 students, management accounting, pass finalist students, you know the things, right? So standard costing and variance analysis. And also the chapter 11 is all about budgeting, preparation and control. So it's all about how we are planning our year ahead for the expenses, for the management accounting, cost purposes, production planning, and how at the end of the year we are going to make a control. So that's part B. It is considered from your entire syllabus, that is 20%. And part C is all about decision making. So here we have 25% of a syllabus. So here involves chapter 12 and chapter 13. So for chapter 12, short-term decision making, right? Here we will discuss and we will have some sort of questions in relevant costings and make or buy decisions like that. And chapter 3 is all about long-term decision making. We will see what kind of theories and knowledge base is available there. So it is contains 25% out of your syllabus. And part D is all about risk and uncertainty. Here the chapter 4 is involved risk and uncertainty. And the part E is all about working capital management. In chapter 5, inventory control. So as you see, chapter 1 to chapter 15. So almost there are 15 chapters you have to cover to get a full marks. It means simply if you want to pass, you must know the knowledge of these 15 chapters. And again, I'm going to remind you, even for simple chapters, for simple knowledge base, you might make some mistakes in the MCQ or TQ questions because that much deep the questions are going to be. It's not like, like AAT papers. So AAT papers and AAT questions are very straightforward. They will ask what they want and you can write very dynamically. You can think very dynamically and the options are very easy to guess. Even if you didn't study well, you can guess the options and you can choose the right answer. But in CA, right, you have to be very careful. Word by word, you have to read your OTQ questions, right? Then only you can find the right answer. In the first instance, you might get the correct idea. You think it's a correct idea, but when you deeply you have to go with your thought process, then you can identify, no, there is a better answer for that, right? So that's how you have to think. So this is the area of your entire syllabus. I hope so you have understood. We have to cover 15 chapters. So our ultimate aim is, at least for one day we have to cover a one chapter with a pilot papers or with a revision kit. Most probably revision kit. So that is our ultimate target. So 15 days, or we can go with a 20 days or 30 days maximum. Maximum 30 days we have to cover these 15 chapters. So that's our ideal goal. And I'm gonna conduct classes every day for the same time, or maybe I will change the time if there is any need only. Okay. And today we are going to discuss about the revision questions papers and also the theory areas of chapter 1, that is introduction to management accounting. Again and again I am reminding you don't have to think that you know, okay, about management accounting, I know about a financial accounting, so why I have to learn again. No, the theories are different and the notes based are very deep, so you have to understand very carefully each and every notes. Then only you can succeed in the exam. It is not an other ordinary papers, it is CA, right? So being said that, so let's go with the introduction to management accounting. Here we are going to cover about financial accounts and management accounts, and a detailed comparison. Nothing, Vidushan. You can just focus on the class. So financial accounts and management accounts, and detailed comparison about financial accounting and management accounting. And we will discuss about cost accounts basics and how the use of the cost accounts and the nature of management accounting information and the objective and scope of the management accounting. And then finally, we will move to levels of planning and control. It means operational level, management level, and corporate level, how we are planning and controlling the management account parts. All right. So for the financial account and management accounts, guys, for financial accounting, you can see financial accounting systems are, it ensures assets and liabilities of a businesses are properly accounted for, and the information regarding profits, losses, and financial position is provided, right? So that is the basic understanding of financial accounting. If you know, when we are doing financial accounts, normally it is for the financial statements preparations. The output of the financial accounting is, we will have the financial statements like, you know, profit or loss or income statement, and also the financial position, right? We call that as a financial position, and changes in equity, right? So those kind of stuffs we will have the output of financial accounting. So the financial accounting systems, it ensure that the assets of the organizations and the liabilities of the organization, if it is recorded correctly, definitely we will have the correct figure for the equity, because assets take away liabilities is equal to equity. So the assets and liabilities of a business are properly accounted, and the information actually regarding about profits or losses. So we know the financial performance. So financial performance means we can get it from the income statement or profit or loss statement, right? So if an organization is performing for a 1 year period, the actual output, it can be profit or losses. So we can get that information from the income statement of a particular company for the particular year. And the financial position, so in that financial position statement, we can get the information about the assets and also the liabilities and also about the equities. In the assets sections, we have current assets and non-current assets. In the liability sections, we have the non-current liabilities and current liabilities, right? In the equity section, if it is a company, what are the ordinary shares amount and the retained earnings, right? And other reserves. So the financial accounting systems, it ensures the company is accounted for assets and liabilities properly, and the informations about the profit, losses, and the financial positions and the cash flows, how the cash inflows are coming, and how the cash outgoings are there. So this is the financial accounting system. And the financial accounts are most primarily, it is intended for the external users. Please focus on the word I have already highlighted in yellow, right? So those are the keywords, like, right? So these financial accounts are primarily intended for external users, like outside the organization, outside the scope of the organization. So the organization doesn't have a 100% control over the external users. So shareholders and the customers and the suppliers and the tax authorities and the employees are the external users of the financial account. So this is the financial accounting focus. And when we consider about the management accounting purpose, the management accounting systems produce information very specifically for internal use by managers. So the financial accounting focus is for the external users, and the management accounting focus is for the mainly for the internal use by the managers. So it can be marketing managers, production managers, finance managers. So it is internal use by the managers within the organization. At the same time, management account serves the internal decision making needs. So internal decision making needs means within the organization, what are the needs for the decisions. So from the top level management, from the middle management, from the lower level, that is operational management, they need to take some decisions. So they need some information, especially management accounting cost informations, right? So management accounts serves the internal decision making from the top level, middle level, and the operational level. At the same time, financial accounting primarily. So you have to understand the word primarily. Primarily in the sense, primarily we are focused for the external users, but it doesn't mean the internal managers they cannot use. So they also can use, but the primary focus of the financial accounting to serve for the external users, right? For the management accounting, it is purely for the internal use by the managers, internal decision making from the top level, middle level, and also operational level. And there are shared information base. So both the financial and management accounting draw from the same underlying data. So you don't need to think that financial accounting they need a separate kind of data from the source documents and the double entries and also the ledger accounts, trial balance. So these are integrated with a management accounting. It means we don't have the separate data for the financial accounting accountant, and also we don't have the separate data to enter for the management accountant side. So both are, if in an organization there are management accountants and also financial accountants, the both the financial and management accounting it will draw from the same underlying data. So same data it can be used for the financial accounting purposes as well as the management accounting purposes. So the key difference arises in how the data is analyzed, presented, and utilized. The financial accounting data, we have the inputs, and management accounting data, we have the inputs. The inputs almost the same, but the processing part, how we are analyzing the financial accounting purpose, and how we are going to analyze for the management accounting purpose is different, and how we are going to present. So financial accounting purpose we will present as a statement, but management accounting purpose we are going to prepare some statements for the internal use by the manager. So we don't have to follow the some formats like financial accounting. So the difference arises in how the data is analyzed or presented and utilized, not like different datas, right? So there is no different data for the management accounting and financial accounting. The data is the same, the input is the same, but how we are gonna process, how we are gonna analyze, how we are gonna present to the users, because the users are different. For the internal users, the management accounting, and the outside users, that is for financial accounting. So that is a shared information basis there for the financial accounting and management accounting. I hope so it understood. Did you understand, guys? Shall I get yes or no? You can get my language, right? This is okay? Is this okay for you? Will you able to understand? Right, that's good. That's good. Right. So moving forward, and the detailed comparison between financial accounts versus management accounting. So the detailed comparison is here. This is very important idea, guys. As I told already in the BL8 classes also, if you see the areas like this format, the pages have a gray highlighted version, then it is a question area. If you see in your study text, the page is in a highlighted, fully highlighted with a gray area like this, it's a very important area. So you have to learn very thoroughly these areas. So you can see the financial accounts. Financial accounts details the performance of an organization over a definite period and the state of affairs at the end of that period. What does it mean? It means, guys, financial accounting detail the performance of an organization. Performance of an organization means the profit or loss, right? Or for a definite period, for a 1 year period, what is their performance? Performance in the sense how much they have made as a revenue and what their cost of sales. Then they made a gross profit. Then after that they have some kind of other income. Then they will deduct about expenses like distribution expenses, administrative expenses, finance expenses, and other expenses. Then finally, we will get a net profit or annual profit. That is their performance. If the performance is good, yes, they make profit. If the performance is bad, so they will make losses. So that is financial accounts purpose, right? And the management accounts are used to aid management to record, plan, and control the organization activities and to help the decision making process, right? So we are going to record something and we are going to plan something, and end of the day we will control the organization activities and it will help the decision making process. So guys, this management accounting and the cost accountings are very essential branches of accounting. So both are help businesses to make some informed decisions, right? So as I told earlier, focuses on providing financial as well as the non-financial information to internal managers for the decision making purposes. That is management accounting. So here you can see limited liabilities companies must by law prepare financial accounts. So we have to prepare financial accounts by law, a statutory law. So every company registered under the 2007 of 7, right? The Companies Act, they have to prepare the financial accounts. It's a must. But in other side, the management accounts, there is no legal requirement to prepare the management accounts. We don't have the legal duty or compliance to prepare the management accounts. If we want, we can prepare. That is for our internal use by the internal managers. So the format of published financial accounts is determined by the local law. Local law in the sense, in Sri Lanka, we have our own company law, and other countries, they have their own companies law. So there is a format, it is required by the law, right? According to that format, we will prepare our financial statements. So the format of published financial accounts is determined by the local law in countries, by international accounting standards and international financial reporting standards. So IFRS is there, IAS is there, LKS is there, SLFRS is there. There are so much of standards, and company law is also requesting some kind of formats. So it is determined by the law and also the international and local standards. In principle, the accounts of the different organization can therefore be easily compared. So why we have to follow a same accounting standards internationally, all the countries? Because we can compare our accounting systems and our accounting data with another company or with another industry also. So if we want to have a comparison, we have to follow the same policies, same formats and structure. Then only we can compare. And the management accounting part, the format of management accounts is entirely at management discretion. It means the management, it means the user of the management account, the particular internal manager, he will request, okay, I need this kind of statements for this purpose. I want to take this decision. So please present it. Please follow this format and give me the information. So there's no strict format like financial accounting in management accounting. So the format of management accounts is entirely at management discretion. No strict rules govern the way they are prepared or presented. So each organization can devise its own management accounting system and format of reports. So there is no hard and fast rules in format. And the financial accounts concentrate on the business as a whole. It means we are not preparing financial statements for department wise, right? For a company, if they have 10 departments or 10 branches, we are not going to prepare financial reports for the 10 branches or 10 departments. We are preparing as a business as a whole. One report, one income statement, one financial position for the entire organization. We are not considering the departments and branches as a separate organizational unit. So financial accounts concentrate on the business as a whole and aggregating the revenues and cost from different operations, right? So if we have a 10 branches, the 10 branches have their own sales, their own cost of sales, right? So we will aggregate, we will sum all the expenses, all the sales, and end in themselves. But inside management accounts can focus on specific areas of organization activities. Even if you have a branch, in that branch there is a particular department. In that particular department, there may be 4 managers, For that 4 managers, only one manager is involving with the production schedule. For that manager, they need a management account for his purpose. So management accounts, they can focus on specific areas of an organization activities, not organization or business as a whole. So information may be produced to aid the decision making. Aid means helping. So aid a decision rather than to be an end product of a decision, right? So that information, the management accounting output, it can help to make a decision, not a actual decision, right? So most financial accounting information is of a monetary nature. We will record in financial accounting if it is only have the monetary value, and most financial accounting information, it has the monetary value. It means cash value. We will measure in cash basis, not cash basis, cash terms, money values. So management account is incorporate non-monetary measures. The important point, non-monetary measures. It means management accounting focus on providing the financial as well as non-financial information to the internal managers for decision making as well as planning and control. So in management accounting, we are not very much focused on monetary values and monetary nature transaction. We have the focus on non-monetary measures also. So management may need to know, for example, tons of aluminium produced, monthly machine hours worked, or miles we have traveled by salespeople. There's no monetary value, but there's a quantity. So management accounts also focus on non-monetary measures. And financial accounts present an essentially historic picture of past operations, right? So financial accounting, we are gonna present historical data, what has happened in the last 12 months in terms of sales, in terms of cost of sale, in terms of expenses, right? What has happened? But management accounts are both an historical record and a future planning tool, right? So we are using the past historical data as well as we are predicting the when we are using the historical data to predict the future as well. So management accounts are both historical record and a future planning tool, right? So this area is very important, guys. We can see some questions here. I think we can do with this 1.1. No, not we cannot do with 1.1. We will cover some areas, then we can come for the questions. Then it's better. Okay. So you have to understand the basics of financial accounting as well as management accounting, right? So in summary, guys, management accounting and cost accounting are very essential. These are branches of accounting. It helps the businesses to make some informed decisions, information based decision. So management accounting is focuses on providing financial and non-financial information. You have to have a clear idea. Management accounting is provide financial as well as non-financial information to whom? To internal managers for what? Decision making, planning and control. Right. So then we are moving to the cost accounts. So most of the people know there is a part we have to calculate the cost. So 50% of the students assume that cost accounting and management accounting are same. No, it's not absolutely same. So the cost accounting, it's a different form of management accounting. So it is a subset of management accounting. So cost accounts, what is cost accounting? The cost accounting is a subset of management accounting. Subset in the sense, it's a branch of management accounting. It is under the management accounting, right? So the cost accounting is a subset of a management accounting. It provides essential data used by the management accountants. If there is a management accountant in your organization, right, they need the cost details to do their management accounts. So the cost accounting is a subset or branch of the management accounting. We need the cost accounting details to do some management accounting. So the main concerns of the cost accounting here, the first concern is the cost accounting is preparation of statements. So we will prepare budgets in the sense for the upcoming year. For example, if your company's year is starting from January to December, from the beginning of January, you will plan ahead of your expenses, your revenues, what are your sources of revenue, how you are going to use that revenues to cover your expenses, and what are your capital expenditures, the capex you are going to invest in this particular year, and how much you are anticipating your sales, how many customers you are going to acquire, and how you are going to serve the existing customers to take revenues from there. So the preparation of budgets as well as the cost statements. So that is the cost accounting part. Actually, we are involving about cost and the collected of detailed cost data, right? We will collect the detailed cost data, like how much we have spent in our factories, how much for the direct materials, how much for the direct labors, for the production overheads, like how much we have spent for the entire year or how we are gonna spend, right? For the upcoming year, for the supervisors' salaries, factory overheads, factory electricity, factory water bills, right? So the collection of details, cost data, and assigning the cost to inventory, products, and services. The cost accounting, like we will prepare a production cost statement where we can have the direct materials, direct labors, and other directs. We will call that as a prime cost. So those three combinations, prime cost. And with that prime cost, if we add the production overheads like indirect materials, indirect labors, and indirect other cost, we will call that as a production overheads. We can get the full production cost. Then after that, we will allocate that full production cost to the number of units. For example, if your production cost like a prime cost is 50,000 and also your production overhead is 50,000, so your entire total production cost is 100,000. For the 100,000 production cost, if you have produced 1,000 units for one unit, the 100 rupees is the per unit cost. So if there is a per unit cost, right, we need the cost details. So assigning the cost to inventories. Inventories in the sense we are purchasing the raw materials and the products and services. We have to assign our cost. The 100 rupees in the sense, in that 100 rupees, there is a prime cost. There is a production overheads, right? Then after that, we will add the profit to get the pricing. So developing budgets and standard cost and analyzing the variances. If we want to develop budgets, every department wise, we need their cost estimation and we need their revenue estimation or forecast for the upcoming year. And also the standard cost. How much we have to pay for 1 kilogram of raw materials, right? How much we are gonna pay for 1 hour of labor, how we are going to absorb the overhead per unit, OAR, overhead absorption rate, right? And we have to analyze the variances. If we want to analyze the variances, definitely we need all the data for one unit, how much direct materials, right? How much direct labors. So everything we need. So developing budgets and standard costs and analyzing variances and assigning the cost to the inventory valuations and making the pricing of the products and services and collection of detailed cost data and preparation of budgets and cost statements are under the cost accounting part. But when I say these all are management accounts, is it a true statement, guys? So main concerns of cost accounting are these four elements. But can I say this is also a part of management accounting, right? Did you understand what I'm trying to convey? Preparing the budget is also management accounting. Preparing a cost statement is also involved management accounting. Collection of detailed costs, assigning cost, inventory valuation, pricing of products, developing of budget, standard costing, variance analysis also management accounting. But very specifically, these are the subset of management accounting, the branch of management accounting that actually very specifically for cost accounting, right? So I hope so you understood this. So guys, the summary is cost accounting is a subset of management accounting that very specifically deal with capturing and analyzing and controlling the cost associated with the business operations. It means business production, right? That is cost accounting. So in detailed manner, what is management accounting then? So management accounting uses the financial data and communicate it clearly for the internal managerial use, right? The financial data means the data that has some monetary value. From cost accounting, we can have the monetary value, the financial data, and the management accounting uses that cost accounting data and communicates it clearly to the internal managerial purposes for the internal managers. And it solely focuses on value creation through informed decisions rather than regulatory compliance, right? Regulatory compliance means it is all about financial accounting. So in financial accountings we have a set of formats we have to follow. We have to follow the LKSs, SLFRSs, IAs, IFRSs, company law. There are so much of compliances, right, in financial accounting. But management accounting, the regulatory compliance is not our focus. Our focus is we have to do some value addition, some value creation to our organization through helping the managers for the informed decisions, right? So that is the main part of the management accounting, right? So this is the difference between the cost accounting as well as the financial accounting. So guys, I'm summarizing again. The financial accounting, the purpose is for the external reporting purpose, but management accounting for the internal within the organization reporting purpose. And the users of financial accountings law, mostly primarily we focus on the external parties like shareholders, tax authorities, investors, suppliers, and employees. As well as the management accounts, internal parties like internal managers, CEOs, executives, right? CFO. So they will use the management accounting data to take some decisions. So value addition is there. And the format and regulations, financial account must comply with the legal standard like IFRS, generally accepted accounting practices, GAP is there. But management account, there is no fixed format. We can customize according to the manager needs, management needs, right? And also financial account, the focus is with the historical data. We are using the 100% what happened, the historical data, the past transaction to produce the financial reports. But management accounting is future oriented. But even if it is a future oriented, we are using the past historical data as well as. So we are producing forecast, budgets, and planning in management accounts. And financial accounting, we are giving at the summary level data. Like, so in the income statement, you can see only the sales. The sales may be from 100 branches, from thousands of products, but you will have a one figure sales only. So it is very summary level data, financial account. But management account, it is not a summary level data. It is very detailed, guys. So we will detail a report. What are the direct materials? What are the direct labors? Right? Under the direct materials, there may be 10 transactions, so 10 items. Under the production overheads, it may be 100 cost items. So it is a detailed breakdown of cost as well as the revenues as well. And financial accounting, normally we will prepare for annually. Sometime for publicly limited companies, they have a compliance rules that they have to produce quarterly financial accounts as well. But management accounting, it depends on the management needs. We can prepare monthly, weekly, or even daily if the management needs that report. So that is the difference between the financial account and the management accounting. And the uses of cost accounts. So possible application of cost accounts are, there are 8 applications I have mentioned according to your syllabus. The first one is calculating the cost of goods produced or services provided, right? If you want to know how much we have incurred as a cost for this particular good or services, actually we have to calculate the cost. So that is the application of cost account. At the same time, determining the department or section cost. As I told already, in one organization there might be 100 branches. For 100 branches, separate cost centers. So we have to determine the department or sectional cost. There's an application of cost accounts. And we have to identify what are the revenues received, right? And analyzing the profitability, right? What are the products are in very profitable manners? What are the products or services it making continuous losses, right? In department wise, the profitability, the organization wide, the profitability, and setting the prices based on the cost data. If we have the cost data and the management will decide the markup or margin based 10% or 20%, even 50% from the cost. So setting the prices based on the cost data is application of cost accounts. And inventory valuations, right? From the cost incurred for the raw materials, working progress, and finished goods, right? Then the cost are the inventories, right? If you are a financial accountant, you need the current assets numbers for the inventory, right? For the raw materials, how much we have? For the working progress, how much we have? Right? As the asset. So these informations are coming from the cost accounts details. How much we have purchased for the raw materials? How much we have used? How much it is in the working progress under the production? So how much we have produced for the finished goods? So these data are cost data. So the inventory valuation purposes and forecasting the future cost, right? The integral to budgeting. If we want to prepare the budgeting, we know how much the unit price is going to increase from our suppliers. So we have to forecast that one. And the comparing the actual cost with the budgets, that is variance analysis. So the budgets, future cost, forecasting, inventory valuation, setting the prices, analyzing the profitability of each revenues, products and services, and department wise collecting the cost and calculating the cost of the goods produced or services produced. These are the possible application of cost accounts. And the scope of cost accounting is it is applicable beyond manufacturing, right? You don't need to think that, okay, the cost means it is only will incur in the factories. No, it is beyond manufacturing. The cost accounting is applicable to service sectors as well. It is applicable for the government sectors as well. Even for the welfare activities, even we can apply the cost accounting. It is not only for the manufacturing organization. And it includes administration, selling, distribution, R&D departments within the manufacturing organization. If there is a manufacturing organization, within that manufacturing departments, they might have some administration, selling, distribution, and research and development departments. So it also, we can apply the cost accounting purpose. So these are the use of cost accounts. And the nature of management accounting and information, right? So the data versus information. So we have to go to the other chapter, data versus information. Before that, I will give you some examples of the financial accounts versus management accounts. Like, you can think about a supermarket chain, a large supermarket chain. So like, Keels, John Keels, we have the Keels, large supermarket chain in Sri Lanka. So they might prepare some financial accounts for their external stakeholders, such as their for their investors, their tax authorities. So these accounts, so it will show the total revenue and profit for that particular year and the assets like, store buildings and how much they have in the inventories and how much they have cash, and the liabilities like, loans and supply payments, accrual payments, employee salaries. So these are financial accounts. And the same supermarkets, right? So the supermarket's internal managers, they will use the management accounting as well. For what? Analyze the sales performance by product category. Like, in the supermarket, there are some dairy products, some bakery items. So the product wise, how much the sales performance. So that is management accounting purpose. And they will track the inventory levels and reduce the wastage by ordering the right amount of stock, right? So these are management accounting. And they will assess the profitability of different store locations and decide whether to offer some discounts or change the supplier contracts, right? So these are involving of management accounting, right? For example, another example is if there's a car manufacturing company like Toyota or Tesla and Tata Motors, they need the financial accounts for their shareholder, right? Showing their revenue from selling the cars and cost of the raw materials, like how much they have used the rubber, glass, steels, and the profits after paying all the expenses and taxes. That's financial accounting purpose. So the same car manufacturing company like Toyota, Tesla, they might have a management accounting team also. They will compare the production cost and different factories in different countries. And they will assess some efficiency of the workers and as well as the machines. They will forecast the demand for the EV vehicles, electrical vehicles, and the petrol cars as well. And they might optimize their supply chains by negotiating better deals with the suppliers. So these are the management accounting purpose. Even a small restaurant, they will have financial accounts as well management account. So financial account, they can calculate the total revenue from selling the foods and the annual profit after loss for the tax reporting purposes, right? Even they can have some assets, kitchen equipments and furniture. Those are financial accounts report. But management accounts for the same small restaurant, they can analyze which dishes are most profitable, right? They can decide on staffing levels, right, based on busy hours and slow periods, right? They can prepare budget for the future restaurant expansion, adjusting the menu prices based on the ingredient cost. So these are management accounting purpose. So you have to understand how it is going on, right? I hope so you are clear with the financial accounting as well as the management accounting. Is it okay? Everyone have a clear picture? At the same time, guys, cost accounts means it focuses on tracking, analyzing, controlling the cost only. But management accounting is uses that cost data to help the managers to make some decisions, right? So I hope so you understood. So now we are in the nature of management accounting information. So management accounting information, we have data as well as information. So as you know, in so many areas, so many syllabuses, you have learned about data and information here also. The data in the sense, it is the raw, unprocessed facts or events. Example, survey responses, right? So that is data. Data mean unprocessed. We have it as it is incurred. We never process any data. It's a raw data. And information in the sense, it is a processed as well as the meaningful to the recipients. So if we are doing some surveys from the Google form, if you are receiving the responses itself as a data. But you use that responses and create some report using that responses, that is information. Right? For example, guys, for a company, they can do some surveys with 1,000 customers about their, new product launch. So the raw survey responses are the data. So the customer preference, they have given rates and star marks, whatever. That is data. And after analyzing the trends, right? So you are giving a trend line and you can get to know 80% like the taste, but 40% they don't like. So that is the information. So we have processed the data, then it becomes information for the decision making. So this is the basic idea of data versus information. And the qualities of good information, this is the exam area. The qualities of good information. So there are essential qualities, guys, right? The essential qualities in the sense, you have to remember these 10 items, right? You have to remember this 10 item because this is area, exam area. So relevance, completeness, accuracy, clarity, confidence, communication, volume, timing, channel of communication, and cost. These are the qualities of informations. You have to memorize these 10 items because definitely they are going to ask you the qualities of information, and they will put one kind of information that is exactly same as it is, but it's not same. So you have to remember what does it mean. So relevance in the sense must directly relate to managerial purpose. For example, guys, a CEO of a restaurant, right? Assume a CEO, chief executive officer of a restaurant, they need the sales data, right? Not the kitchen inventory details. So CEO doesn't need what are the equipments in the kitchen, how many fridge you have, how many spoon you have. No, they have the sales data. Sales data means only the sales data. That is the relevance. So must directly relate to the managerial purpose, right? Why they have to use? What is their purpose? So the management accounting, it has to serve that purpose. So that is called relevance, right? So for example, the relevance in the sense, if you are gonna do the BL6 exam, you cannot learn the BL8 classes, no. You cannot learn digital business strategy to do the management accounting subject. You have to actually learn the management accounting subject to do the management accounting paper. That is relevance, right? And the completeness in the sense, full information required for the informed decisions, right? It means not the entire details. Completeness means not a detailed, right? For example, in an income statement, sorry, in a management accounting, you are using a data of 100,000 raw transactions. You don't need to produce in the report all the 100,000 transactions. Whatever the information need for the full information, for the informed decisions, that is completeness and accuracy in the sense. So completeness example is, for example, a retail shop owner, they can analyze the profits. They must consider the online sales as well as the store sales. Then only they can combine the actual sales. That is completeness. If your sales figure is missing the online sales, then it is incomplete for the decision making purpose. So the data should serve as a complete, right? And accuracy in the sense must be accurate enough for its intended use. For example, there is an airline company, right? So that airline company is tracking the fuel cost. So they must have some precise figures so they can avoid some financial losses. So that accuracy is there, the intended use. It has to serve the intended use. That is accuracy. And clarity. We have to clearly present to ensure the understanding and correct the action. A simple profit report is more useful. You don't need to produce 100-page document filled with some complex numbers. That is not a clarity. The particular person or CEO will lose the clarity if you give the 100 pages report. Just give a 1-page report. What he needs, that is clarity. And the confidence. The information must inspire the trust. The clarity of assumptions enhances the confidence, right? So a bank, they must trust its risk analysis, right? So if they are gonna give some loans to particular organization or particular people, they must analyze the risk analysis. So if you have assumptions like, okay, we have analyzed their bank statements, their current account balances, and whatever the bank loan obtained before, so they have paid regularly. So our risk is under the appropriate level. So that is the risk analysis. It will give you the confidence, right? And the communications, it clearly transmitted to individuals authorized and tasked to act. We have to communicate to the person who is in the decision making process, the authorized person. So we have to clearly transmit to the individuals who are having the authority, like CEOs, CFOs, right? So the communication and manageable quantity. That also very important, students. For the communication, I can say example. For example, if there is a project manager, they should some updates, right? They should get some updates on the cost overruns to take some corrective actions. So that's the communication. He is a absolute authorized person for the project. And the volume. So volume means manageable quantity, concise and focused, right? A company, they should avoid so much of excessive data. So that will overwhelm the decision makers. They feel confused and lost if you are giving 100 pages reports. So the volume should be manageable, as well as the timing. So available precisely when needed avoids the excessive frequency, right? A hotel manager, they need some daily booking reports, not a quarterly report. He needs a daily report. If you are giving the report after 3 months, no purpose served, right? And the channel of communication, appropriate methods for specific situations. So we have to communicate sometimes through the email, through some formal reports, sometimes verbal, electronic written. So the channels of communication as well as the cost, the benefits of information must exceed its cost collecting processing. A small business, they should not spend too much on expensive software for minor reports. So it has to cover the cost we are incurring. So exceed its cost. So these are the, you know, the qualities, essential qualities of a management, qualities of a good information. If there is a good information, it has to cover this. So let's see one example question that is from 1.1, I think, from your revision quick question. See this. Which of the following is not an essential quality of good information? Can you please answer, guys? Which of the following is not an essential quality of good information? Just now we have seen that. It should be relevant for its purposes. It should be communicated to the right person. It means authorized person. It should be completely accurate, or it should be timely. Students, you can see from the list we have seen, the relevant word is there, communication is there, accurate is there, timely is there. So what is the correct answer? 1.1, what is the correct answer? Subhashini C is the answer, and Ahnaf C, Nuzail B, SDC, Aparna Mayuran C. Right? So students, you have to understand that it should be relevant for the purposes. It's exactly. It should be relevant. That's what we have learned here. Relevance. Yes. Must directly relate to the managerial purpose. Yes, it is relevant. So the first one is the essential quality of good information. Question is not an essential quality. So that's not the answer. A is not answer because it is actually a quality. And it should be communicated to the right person. See, in the communication, clearly transmitted to individuals authorized and tasked to act. Authorized means the right person. That's the word, authorized person, who is of the authority. So that also, it's a quality of a good information. And another one, it should be completely accurate. Is it correct? What we have seen in the accuracy must be accurate enough for its intended use. We don't need the 100% accuracy. We need an accuracy that's enough for the intended use, right? If we are gonna take some decisions, if we have that much enough, only one report is enough. No need of 100 pages. You don't need to go that much accuracy. We don't need to mention 110.4 decimals places. We don't need that much of accuracy. We need just an enough accuracy for the intended use, not complete accuracy. So that's the tricky part. So it should be completely accurate, enough accuracy is enough, not a complete accurate. So that's not a quality of good information. And it should be timely. Yes, we have seen that, right? So timely, you can see the timing available precisely when needed. We don't need to produce the daily report after a 3 months period. Avoid excess frequency, right? So the timely is correct, but completely accurate means no. So the answer is what? The answer is going to be the C. Did you understand the question, guys? It might seem the same answer, but actually there is an answer. So Swati, you are correct. Aparna correct. Fazmi correct. But Nuzail, you have chosen B, right? It should be communicated to the right person. Right person means authorized person, Nuzail, right? And the other people, Subhashini correct, Arnav correct, but Abhi choose D. It should be timely. Yes, that's a good, the good information quality, right? So did you understand this question, guys? This is how the question. It's a very simple question, right? But you are making some mistakes. That's the CA paper, right? You cannot see this much of detail in AAT papers or ACCA paper, but you will see the actual, the depth of questions in the CA papers, right? So shall I get yes? Are you with me? Did you understand how the questions are gonna test? Sajid, Adil, Atifa, Abhi, Abhirami, shall I get yes or no quickly? Did you understand what I'm trying to convey you? Akil, Afzar, Amjad, Aparna Mayuran, Ashok, Balini, Fazil, Ilma Nazar, Isham, Jamuna, Janani, Janusha. Yes, it's tricky. That's what it is CF Fazmi. Okay. So then let's move. Right. So we will have these 1.2 questions also, because this is also related with financial accounting versus management account. See, which of the following statements about management account is are true? Right? We just studied what does it mean by management accounting, what does it mean by cost accounting, and the use cases of cost accounting and the differences of financial accounting versus management accounting. Now you are going to answer this question. The question is, which of the following statements about management accounts are true? They must be stated in purely monetary terms. Limited companies must, by law, prepare management accounts. They serve as a future planning tool and are not used as an historical record. There are 4 options for you. A, B, C, D. What is the answer? So Arnav is choosing the C, Rujitan is choosing D, Subhashin is choosing C. So there are different answers. Janani is D. So most of the people are choosing the D as an answer. So let's analyze. You can see they must be stated in purely monetary terms. Is it correct? Management account are purely monetary. Purely monetary means there is no non-financial information. Everything is financial information with a money value. Is it management account? We are using the non-monetary values also. Did you understand, guys? When we are having a detailed comparison, you can see here, management accounts incorporate non-monetary measures. We are not only using the monetary measures, we are using the non-monetary measures, right? So that statement is purely wrong, because management account, not a purely monetary terms, we are using the non-monetary items also. So if the answer is having the first part, the Roman number 1, it's wrong, right? So A we cannot choose because the Roman 1 is there. And B we cannot choose. So the answer, it has to be within COD. So we have eliminated the A and B, right? So let's move. Limited companies must by law prepare management accounts. Is it correct? Right? Is it correct about, here see, In the management account side, there is no legal requirement to prepare the management accounts. Legally, we are not mandatorily prepare management accounts. As per the management needs only we will prepare. But financial account, yes. So then the second one, what is that? Limited companies must by law prepare management accounts? No. So if there is a second Roman number in the answer, that is not an answer. So again, the C part is we are eliminating. So we do have the only option is D. What is that? None of the statements are correct. So then we can see the third statement also. They serve as a future planning tool and are not used as an historical record. As I told you already, guys, yes, management accounting serve as a future planning tool. We are having future budgets, future forecast of our sales, right? Yes, it serves as a future planning tool and are not used as an historical record. No, we are using the historical data to predict the future. So, in the end, okay, and are not used as an historical record, it makes this entire statement as a wrong because they serve as a future planning tool is correct. We are entirely agree. But the statement is containing and are not used as an historical record, then no. So then none of the statements are correct. So the answer is D. You get the point? Abhi, you have chosen C, right? There is a, you have to read the full statement. Then you have to come to the conclusion. Okay? And who are the other people? Ahnaf, you also chosen C, right? You have to read the entire statement. Don't do this mistake in the final actual exam. Right? Other people like, Shwati, Afzar, Fazmi, Aparna Mayuran, Janani, Balini, Adil, Netra, you have chosen D. Right? Rujitan also. So I'm happy for that. Most of the people you have chosen correct. Right. And let's see another question. This is also not related with financial accounting or management accounting. Right. So I think we will see some sort of theories, then we will come back to the questions. Right. So you have to remember, guys, what are the essential qualities, right? So these 10 qualities you must know. And let's move to the assessing value versus cost. What does it mean by value versus cost? Guys, here we have to ensure tangible and intangible benefits that outweigh the cost of information gathering. What does it mean? For example, if we are going to do management accounting, we need the cost informations, cost data with a good qualities, as we have seen right now. So if we need a data that complete, that accurate, that in a timely manner, so for that, we must have softwares, we must have people, a lot of people, we must have a place for them to work, we have to pay the rent for the building, we have to pay the salaries for them, we have to provide transport for them, we have to put air conditioner in the rooms for the management accounting team, when we have to pay the electricity bills for the computers, we have to buy the latest computer models for them, latest softwares, monthly we have to pay some subscription amount for the softwares. So definitely if you want good information with these 10 qualities, you must invest amount, you must incur expenses. So those tangible and intangible benefits, tangible benefits means you can see, okay, we are having some benefits, but intangible benefits means it is very indirectly related with the process, but there is a definite benefits. So those tangible as well as the intangible benefits, it should outweigh the cost. Outweigh the cost means it should exceed the cost. The benefit you are getting from assessing the value from the cost account or management accounting, absolutely it should outweigh the cost. Right? So you can see this in the graph. The point is that the perfect information is probably is not worth paying for. So you can see. So the marginal cost and the marginal benefit. So the marginal cost means you don't need to incur a high cost, right, to get the marginal benefit. So your marginal cost to incur for the cost accounting or management accounting systems It should equal to the marginal benefits. That is the optimum point. That's the quality of information, right? So the cost or benefit of obtaining the information should be in the control. It should ensure the tangible and intangible benefits we are getting should outweigh the cost of information we are gathering, right? So you have to understand that one. That's the qualities of good information part. And why this information is important? Why this good information is important? Because we are gonna do some decision making in the management accounting and management decision. What kind of decisions? We will price our new products, like cost plus pricing decision. So once we computed our unit cost price, we will add some markup, then we will come with the unit price. So the cost plus pricing decisions, then only we can price our new products. That is management decision making. Then only we can give the products to customers with the reasonable prices, the competitive prices, right? So if we want to determine how much we are gonna make as a price for our new products, you must have the cost details, management accounting details. That's one of the decision making, right? And the machine maintenance, right? For example, guys, for the pricing of new products, for example, if there's a pharmaceutical company, they are gonna launch some kind of new medicines, they need to set a price, right? If a manufacturing cost a pill, right, a medicine, a tablet, if it is cost 5 rupees, then they can add a 20% profit margin and they can sell to the six rupees, right? So that is pricing, understood? And like machine maintenance, cost comparison for repair, purchases, or hire. So if you are a management accountant, so you are going to decide, okay, our machine is in a condition of breakdown, it's not working. So you are comparing, okay, if we are going to repair that machine, how much it will cost? If we are going to purchase a new machine, how much it's going to purchase? And even if we have an option to hire, how much we have to pay as a rent? So you have to compare these options, whether we are going to repair the existing machines, or we are going to purchase a new machine, or we can hire and give some rent to the additional people without investing a heavy, large bulk money. So this is a management accounting decision. And even in invoice discounting, cost benefit analysis of early payment discounts. For example, you are doing a business, right? You are obtaining bank loans. If you are obtaining bank loans, you have to pay the interest to the bank. And also you are selling to the credit. You are selling your goods and services for the customers on a credit basis. And they are taking 30 days to pay. So for that 30 days, you don't have the cash, but for that 30 days, you have to pay the interest to the bank. So you can calculate something, right? How much I have to pay for the 1 month as a bank loan interest, and how much I have to collect from the customers. So I don't need to pay to the bank. For example, if you are going to pay to the bank, it will cost you 100,000. But you can give 50,000 discount to the customers to collect the cash before 1 month. So then you can serve the 50,000, right? Are you getting my point, guys? Are you getting my point? If you are going to pay 100,000 for the bank loan interest for the 30 days, but that 30 days you have offered to the customers as a credit period, but you are asking your customers, I will offer 50,000 discount, but please pay right now. So if they pay amount, you can serve that 50,000 as an interest cost, right? The cost benefit analysis. Students, are you getting my point? Nusaif, Zumri, shall I get a sono? Are you with me? Zuha, Yadartana, Vidurshan, Shwadi, Kavi, Gundan, Suhail, Subhashini, Shahida. Did you understand what I'm trying to convey to you? Netra, Rujitan. Okay. So these are the decision making skills you have to think. Right. For an example, just assume, so in Digital Accounting Institute, right, we are outsourcing our book printing for AAT students to companies outside of organization, our digital accounting organization, outside of our organization. We are outsourcing that printing of thousands, 2,000 books to other printing service providers. So we can think, okay, if we are gonna print 1,000 books for one book, and there are 12 books in AAT syllabus, so 12,000 books we are gonna print. For the 12,000 books, if we are gonna pay money, for example, we are going to incur 5 million, okay, 50 lakhs in total cost for the 12,000 books. So then I can consider, okay, if I am having a 5 million rupees, why can't I open my own press? Why can't I purchase my machines? How much it cost? How many employees I needed? The rent place. So how much it can take to actually start a press business, right? So if it is only 2.5 million required to start and making a purchase and hiring people, then I can do my own company, right? Printing company. Why I have to spend 5 million? So that is the cost versus benefit analysis. I hope so. It makes sense. But you have to consider the services, your time invested, those non-monetary measures also you have to think. You cannot measure everything in the monetary terms in financial management accounting. You have to think non-monetary items also. You have to invest your time. There's a learning curve because this is not the area you are very familiar with, right? I'm a lecturer. I can do lecturing, but I don't know about the printing businesses, no, printing industry, no. So I cannot consider the only the monetary terms. I have to consider the non-monetary items. I want some experts people. I want to depend on other people consultancy. I need information from external parties. I have to invest the time. I have to learn new things. I don't know about the machines. So we cannot take some decisions in management accounting purely based on some monetary values. We have to think about the non-monetary items also. So invoice discounting and information, the crucial across the all organization like profit or not profit for strategic and operational decision making. So these are the management decision to taking making examples. Okay. And the types of information needed. So the types of information needed, there are some categories, right? The first category is financial information and non-financial information and combination. So financial information means, guys, purely monetary data, like how much it cost in rupees value, in dollars value, or how much we made as a revenue in rupees values or dollars value. So that is have a monetary data, right? There's a value, cash value. And non-financial information means it's a qualitative data. How loyal our employees, how much we can trust our employees, their productivity level, their efficiency level, their involvement with our company, their trust factor. We cannot measure these all items are in monetary data. We cannot give loyalty 100 rupees, 200 rupees to each employee. We cannot measure. These are very qualitative data. So these also we need for the management accounting purpose. And the combination, the integrated financial and non-financial data for comprehensive analysis. If you are gonna analysis, as an example I told you, the printing business, if we are gonna consider, we cannot consider only the monetary values and financial informations. We have to consider also the non-financial measures. So that is the integrated financial and non-financial data for the comprehensive analysis. So you have to know we want financial information, we want non-financial information. We need a combination of financial and non-financial information. For example, a canteen provision, right? For canteen, cost of staffing, meals, utilities, those are financial information. Employees' moral, meal counts, utility consumptions, those are non-financial. And average meal cost analysis, we will have a financial information as well as a non-financial information. And the importance of non-financial information is equally essential for informed management decisions. If you are gonna take some informed management decisions, like financial data or financial information, you must consider the non-financial information also. It must be monitored accurately because it is influencing decisions alongside the financial data, right? Even, for example, if you are choosing the right supplier for your organization, you have considered 10 suppliers. So one person is saying that I will serve you with a minimum cost, right? So he is the low cost provider, but you are not going to purchase from that low cost providers. You are going to the next person because of why? You are not considering the monetary value. You are not only considering the monetary value, you are considering the reliability, how much he is reliable, the continuous services, continuous, whether he or she can provide continuous delivery orders. So we have to consider their experience, their moral, their business knowledge, service quality. So always not a low cost provider, right? So that's what the non-financial informations also, it is very important. So guys, in summary, the financial information like profit, revenue, cost. Non-financial information are like employee morale, customer satisfaction. And the combined information means we are merging together the average cost per meal in a company canteen. So that's a financial information. And the impact on employee morale, that's a non-financial information, right? For example, the employee meals cost $10,000 a month or 10,000 rupees a month, and the employee satisfaction is improved by 30%. So that is an non-financial data. So management, they can keep the canteen open since happy employees improve the productivity, right? So this is kind of data is very important. And objective and scope of management accounting, there are some organizational objectives. You know, in objectives defined, guys, objective in the sense organizational aims or goals, right? We are considering this as a aims or goals, guys. So objective means what aim we are having or what kind of goal we are having with us, right? That is objective. Strategy, a very important one. Strategy in the sense it's an action plan to achieve the objective like aims or goals. If we have an objective, it means you have aim or you have some goals. How you are going to achieve that objectives? What is your action plan, actual plan? That is something called strategy, right? For example, let's say Apple company, that's a profit making organization. Their main objective is maximize the profit and maximize the shareholders value. That is their main objective. Strategy means what is their action plan, how they are going to maximize the profits for this year, how much they are going to increase the shareholder value this year. That is action plan, that is strategy. So the types of organization means profit. So you must know what is strategy, what is objective. So objective means our aims or goals. Strategy means how we are going to achieve, what is our action plan for achieving the objectives. So the types of organization, as you know, profit making organizations, their objective to maximize the profits or increase the outputs. So non-profit organizations, their objective is focused on service provision or cost minimization, right? So that is a type of organizations. So depend on the type of organization, the objective it differ. And the common objectives: profit maximization, shareholders value maximization, cost minimization, revenue maximization, market share increase. So these are very basics. You know, profit maximization means maximizing the profit. So shareholders value maximization means maximizing the net worth of the shareholders. Cost minimization means we have to reduce the cost, right? So these are the some common objectives that you have to have a sudden knowledge of this organizational objective. And the strategies and organizational structures, so that is an important one. So the school of thought, there are two thoughts, guys. Structure follows strategy and strategy follow the structure. Structure follows the strategy means structure set to implement chosen strategy. First we are focusing on structure, right? How our organization is structured. That structure will decide how we have to implement our strategy according to the structure. So here we depend on the strategy. Sorry, we depend on the structure. See, we can say we depends on the structure because according to the structure only we will decide what is our strategy. That is, structure follows the strategy. And strategy follows the structure means organizational structure dictates feasible strategy. Sorry, here depends on this strategy. Okay, sorry. Here, according to what is our strategy, then we will set the structure. So actually, this is strategy, right? First, we will set what is our strategy. Then we will structurize that company, right? For example, guys, a company, it might expand internationally. So it create new regional offices, right? You see, first I can say an example that a company expands internationally. So they are increasing their businesses internationally. What does it mean? This is the strategy, right? So first they made the strategy, right? So first option is they made the strategy. Then after that, according to the strategy only, okay, this is our strategy. We have to expand internationally. So we have to open new regional offices, right? So then they are deciding creates new regional offices. What does it mean by? This is a structure, right? So they are structurizing. So what has happened first? The strategy. So structure set to implement chosen strategy. So first option, you are choosing the strategy, then you are structurizing. That is called structure follows strategy, right? Follows the strategy, right? And strategy follows structure means organizational structure dictates the feasible strategies. So it depends on structure, right? For example, I'm saying a company already has offices in major cities. Okay, I'm saying a company already has so many offices. So already they have the structure, right? Already has offices in major cities, right? So that is the structure. So already they have a structure. So the first option is here what? The first option is here, it is the structure. Then after that, when they have the structure, according to the structure, so they will decide the strategy. So now the strategy is, for example, so they are deciding, so decides to focus on local markets instead expanding abroad internationally. So now the strategy, it depends on the structure. So this is called structure follows strategy or strategy follows structure. Did you understand, guys? It means which one comes first. First, we are creating a strategy according to the structure, or according to the structure, we are gonna create our strategy. So you must know the difference. So it is important for managers to recognize the interdependency of structure and strategy. So we are dependent on the structure or we are dependent on the strategy. Depend means what comes first, strategy or structure. So this is a concept, strategy and organizational structure. I hope so you understood. And long-term strategic planning. So long-term strategic planning means, guys, we have to plan for a very long period. So long-term strategic planning means we will call that as a corporate planning. In your syllabus also, you have business level, corporate level, strategic level. So corporate planning, it's a long-term strategic planning to achieve the long-term objectives. So typical durations of long-term objective is more than 2 years, 5, 7, or 10 years. If you are going to achieve something in the next 2 years, next 5 years, next 7 years, even next 10 years, these are corporate planning, long term strategic planning. So there are some stages, guys. So there are some stages. So before that, for example, long term strategic planning like 2, 5, 7, or 10 years, if there is a company, they plan to launch their electric vehicles over the next years. So Toyota company is thinking in the next 10 years, I am going to produce 100% electric vehicles like Tesla. Or Elon Musk, Tesla company, they might have some idea, okay, I will beat this Apple phone in the next 10 years. I'm going to work on a new iPhone competitor and I will make sure to get a better iPhone, better than iPhone in next 10 years. So he can decide that. So the typical duration is 2, 5, 7, or 10 years. So there are some stages, right? So why they need a stages? Like, if they are gonna produce some electric vehicles in the next 10 years, they have to invest in the battery technology. They have to invest in the charging stations of, electric vehicles, because electric vehicles, they are not running on the petrol. They need the charging stations. So from the entire country, they have to implement the charging stations over the next years. And also we have to collaborate with the government partnership. So the 10 years it will go like a crazy, right? So there are some stages. So the assessment stage and the objective stage, the evaluation stage, and the corporate plan stage. So these are the stages involved. So here, this is in your study text, guys. I can explain to you the stages here. The first one is the assessment stage. The assessment stage means we will plan the external environment. So whether we have the market, okay, it means actually from customers' perspective, they have the problem to solve, right? So we have to analyze the external environment like political support, economic of the country, legality, right? Society, social, cultures. So we have to analyze the external environment first. Then we have to assess the organizations, our organizations, what is our strength, what are our strengths and weaknesses and opportunities as well as the threats, right? So we have to assess the organizations and we have to assess the future, how the future is coming, how the consumer demand and taste is going to change, and what kind of technologies can be right in future. So we have to assess the future and we have to assess the expectations of the customers. So after this assessment stage, that is the first stage, right? For the long term planning. Okay, I'm telling the long term planning, long term strategic planning. So we have to go with this assessment stage first. Then after assessing all the things, we have to set some objectives. We have to evaluate the corporate objectives. Okay, next 10 years I have to produce this one because I have assessed all the external factors, organizational resources, I have assessed the future, I have assessed the expectation. Now you have set your corporate objectives for the next 2 or 5 or 10 years, right? Then the evaluation stage is consider the alternative ways of achieving objectives. That is strategy, right? So our definition of strategy means what? The action plan to achieve the objectives, that is goal or aims. So we have to consider alternative ways of achieving our objectives. That's this evolution stage. Then after that, okay, you have chosen one option to achieve the objectives, right? Your next 10 years plan. Then the corporate plan, the actual action plan, that is the actual strategy, right? Agree a corporate plan, that is your strategy. What is that? Okay, I am gonna produce electric vehicles over the next 10 years, right? You have assessed all these external environment, organization, resources, capabilities, right? And the future and the expectation, and you have set an objective like I'm going to launch electric vehicles over the next, right? So objective. Then you have considered the alternative ways. How can I achieve? I have to start a company, or I have to work, or how can I collect the money? So you have considered the alternative objectives. Then you are coming with a plan. Okay, you have chosen, okay, I'm going to start a new company. Then I'm going to do some production planning, how I am going to produce thing, and how we are going to do resource planning. We need staffs, we need money, we need machines, we need land, labor, capital, right? Investors, and the product planning and the research and development planning. So actual action plan, so detailed operational plans which implement the corporate plan on a monthly basis, quarterly basis, annual basis, even daily basis also we can create corporate plan, right? So detailed operational plans which implement the corporate plan on a monthly, quarterly or annual basis. Operational plans, the low level plans, it includes very short term budgets, standards and objectives. So you can see here in the right side, this is all about long term strategy planning, students. For the next 10 years, 2 years, 3 years period, the assessment, objective, evaluation, and the corporate plan. Until you come up with a corporate plan, that is a long term plan. Then here, this is a short term planning. So, how we are going to do our production for a monthly, quarterly, annually. How we are going to have our resource plan quarterly, monthly, annually. So, these are short term planning, like operational plan, right? So, I hope so you understood this. So, there are stages. So assessment stage, objective stage, evaluation stage, and corporate plan stage, right? So that is all about your long-term strategic making. So short-term tactical planning means like 3 months period. For example, a company, they have a seasonal sale, so they are gonna give some discounts and advertising campaigns to boost their sales in the next 3 months. So that is a tactical or middle level, right? And short-term tactical planning, it converts the corporate plan into actionable short-term plans, right? You can see here the word short-term plans. So short terms means within a 3 months period, within a 4 months period, right? Ideally within a 1 year period. And essential for achieving the long-term organizational objectives. If you are gonna achieve your long-term strategic plan, your corporate plan, you must achieve your small short-term plans only. Then only you can go forward and achieve your long-term plans. So if you want to convert your corporate long-term plans into actionable short-term, monthly, annual plans, quarterly plans, that is called short-term tactical plan at the middle level. So the purpose is incremental implementation of strategic goals, right? We are gonna slowly, we are implementing our short-term tactical plans. So it is in the long term, we will achieve our strategic goals, right? And the levels of informations, Anthony's hierarchy of information. So there is a person called Anthony. He has a levels of informations hierarchy. Like, so he's saying strategic information, tactical information, and operational information. So strategical information means he's considering the long-term objectives, overall organizational directions, right? In overall, what is our direction? So it is in the top level, long term, for the 2, 5, 7, 10 years, right? How we are going to direct our company. It's normally these strategic informations, the top level informations are used by the senior management like CEO, CFO, right? So C-suite level professionals. And the features of these informations are, the first one is this is internal and external origin, guys. So these strategic information, we can get it from internal as well as external, right? It means within the organization as well as outside the organization. And it is very summarized organization wide at a high level. So it's a summarized information, right? We don't have 100 pages or 200 pages of information as in strategic information. It's just a one piece of information, one kind of idea. It's a very summarized organization wide at a high level. And long term relevance, for the 10 years, it is relevance. Often ad hoc or quantitative and qualitative. Ad hoc means suddenly they need information. Suddenly they will get that information. It also quantitative as well as the qualitative information, and it deals with the whole organization. We will think in the top level. We will consider business as a whole. So it will deals with the whole organization. That is strategic information. So tactical means middle. So resource allocations like medium term monitoring. For example, tactical information is used by the middle management. So for the productive measurements like output per man hour or per machine hours, how many units we are producing, these kind of productivity measurements are coming under the medium term monitoring, right? That is tactical information. For example, productivity reports, right? We have 10 employees. So one employee, how much he is producing 1 hour. And budgetary control reports, the variance analysis reports, cash flow forecasts for the next year, variance analysis reports. These are tactical information in the middle level. And the features of this technical information, it is mainly internal. You can see the strategic information, it can come from external as well as the internal. But technical information like, these productivity reports, budgetary control reports, these are mainly internal. We cannot get that information from outside of our organization. And regularly we are preparing this department wise, very specifically we will get this report. And it is a very short to medium term. Very short to medium term. And quantitative measures also there. It is summarized at a lower level. Not a high level, low level. But operational level, this is day-to-day management, short-term executions, right? So daily we will collect information internally, very detailedly, every task, immediately, frequently, every daily, hourly, we will collect the data. And it is very quantitative data for immediate operational control, and it required frequently by its main users, right? So this is the features. An example, weekly payroll details. Weekly payroll details means how much we are gonna give our factory employees salaries. The payroll details. Weekly we have to prepare that payroll. Pay slips. Daily raw material inputs. How much raw materials in kilograms or liters we are giving to the factory. That report. Real time production data. What's happening actually right now from the day to now in the factory. So these are every minutes, every hours we have to update. So these are the operational informations, right? So these are the Anthony's hierarchy of information. So let's see some questions and come back to the theory part, guys. Already we have seen the 1.2. I hope so. Now we can see 1.3. No, we cannot. Okay. 1.4. We can see the 1.4 question right now. See this. Which of the following statements are correct? Strategic information is mainly used by the senior management in an organization. Productivity measurements are examples of technical information. Operational information is required frequently by its main users. Which of the following statements are correct? What is your answer, guys? Zumri, Zuha, Yadarthana, Vidurshan, Shwadi, Suhail, Shubhasini, Shahida, Ishfaq, Netra, Rishantan, Vidurshan, Raditevi. ஸ்டூடெண்ட்ஸ் யார் சார் பிறகு ஜாயின் பண்ணவங்க நம்மளோட ஆக்சுவல் சப்ஜெக்ட் வைஸ் குரூப்பில் இல்லைன்னு சொன்னால் ஜாயின் பண்ணிக்கொள்ளுங்க. I will send the group link again in the chat. So what is your answer? Right, Shaida is choosing D as an answer. And Fazmi D, Kavita D, SD. SD இன்றிருக்கிறது உங்களோட பேரை போட்டுக்கோங்க ப்ளீஸ். நேத்ரா D. Subhashini is choosing A, Balini D. So out of 100%, 90% of the people are choosing D as an answer. But I can see A also from some people and C also from some people. But 90% of the students are choosing D as an answer. 1, 2, and 3. Here you can see, guys, strategic information is mainly used by senior management in an organization. Is it correct or not? See, in the organizational level, what we have studied here, right? Anthony's hierarchy of information. The strategic information means long-term objectives used by senior management. I have included in the note. It is used by the senior management. So it is correct or not? It is correct. It is mainly used by the senior management, not only senior management. Here, if they include strategic information is only used by senior management in organization, no, we cannot consider. The mainly they have used by senior management. Yes, it is correct. So in the answer, if it is not contains Roman number 1, it's not an answer. So yeah, we cannot, which of the following statements are correct? So A is having 1, B having a 1. So C is not an answer. Because of why? Because it doesn't contain Roman number 1. Because that's a purely correct. So we are eliminating the C as an answer. And productivity measurements are examples of technical information. Just now I have told you, right? Just now I have told you productive informations are resource allocations in a medium term monitoring. And technical informations are used by the middle management mainly. And productivity measurements like output per man hour, output per machine, so those are technical information, right? So that also correct. So in the answer, if it doesn't contain the second one, that's not an answer. So B, we don't have second one. So B also now we can eliminate. So C also eliminated, B also eliminated. So the answer should be within A or D. And third one, operational information is required frequently by its main users. This is in my notes. Operational information, see, day-to-day management, short-term execution, internal, very detailed, immediate, frequent updates. Immediate and required by frequently by its main user. Frequently means every hour, every minute they need it. So that also correct. So first option, second option, third options are correct. So the answer should contain first one, second one, third option. So the correct answer is going to be the D, my dears. You have to think like a chartered accountant. Okay. Did you understand this question? If you learn correctly with a relevant study notes, with the notes I have provided, you won't lose any marks, my dears, because that's how with a clarity I'm preparing the notes. If I'm preparing the notes, any questions, if you are facing any questions, you will have the answer, right? Not like other institute preparing notes from any other resources and providing for the sake of providing. No, I'm spending so much of time to prepare your notes because it should be relevant. It should be a good information, right? So please learn it and use it correctly. So the actual answer is D. And now we will move to the question number 1.5. I think, okay, this also we can do, right? See, which of the following statements are correct? Forecast will always provide a good source of data for historic cost. Financial accounts provide the best source of data for the future cost. A good source of data for historic cost are the financial accounting records and the documents that back up these records. It's a legal requirement to produce the management accounts. So, from the four options, which of the following statements are correct? You have to choose one, only one, A, B, C, D. What is your answer? Subhasin is choosing C as an answer, right? Shahida also C. Fazmi C. What is that? Let's see. Forecast. Forecast mean what, guys? We are forecasting our future. Next year, how much we can make as a sale. How much we are gonna incur for our cost. How we can control our sales revenue forecast. So we'll always provide a good source of data for historic cost. Always, there is a word, you have to focus on the words like always, only, then you can get a clear picture. So forecast will always provide a good source of data for historic cost. Is it? Right? It gives a good source for the data for the historic cost because we are using the historic or past transactions or past detailed information to predict the future, to create the forecast analysis. But we cannot say it's always a good source for the data for historic cost. Not always. Sometime not. So B, financial accounts provide the best source of data for the future cost. Is it correct? Right? Is it correct? Best source of data for the future cost. And the C1, a good source of data for historic costs are the financial accounting records and the documents that back up these records. Or D1 is a legal requirement to produce management accounts. So D entirely we can eliminate, my dears. Entirely we can eliminate. There is no legal requirement to prepare management account. That is only in financial accounting. So D eliminated. And also A also forecast not always provide a good source of data for historic cost. Not always. We are using some predictions, some assumptions. We are predicting like, okay, we will increase our prices by 10%. So how much the price? And we are estimating our current demand will increase by another 20-30%. So that is not the good source for the data for the historic cost. A. So A we can eliminate, D we can eliminate. So the answer should be within B and C, right? So B and C, focus on the B and C. B is saying financial accounts provide the best source of data for the future cost. Financial accounts means what, guys? Financial accounts means we just studied what has happened in the last 1 year. What is your performance of the last 12 months? If you performed well, you will get profit. Otherwise, you will get a loss. That is in the income statement. So the financial accounts always it provides the best source of data for the historic cost, past data, not for the future. Future is for the management accounting purpose. So B also definitely we can eliminate. So what is the answer is a good source of data for historic cost. It means what has happened in the past are the financial accounting records and the documents that back up this record. Documents mean the prime source documents, right? If you are gonna record the cash receipt, you will have the receipts as a source document. If you are gonna record the cash payment, you will have the payment voucher. If you have the petty cash, you have the petty cash voucher. If you are gonna record the credit sales of goods, that's a sales invoice. Credit purchase of a goods, that's a purchase invoice, right? And other than that, we have a general journal vouchers. So those are the source of documents. So we have backed the transactions with the source documents in the financial accounting. So that is the best source of data for the historic. What has happened in the last January, we can get that transaction and we can get that document. So that is a good source of data, right? So the actual answer we can choose is the C. That's the correct answer. So Netra, Atifa, and Shwadi, Fazmi, Balini, Shubhashini, Shahida, always you are correct. You are correct. And Suhail, you have chosen B as an answer. Suhail, you have to think future cost, right? Not aligned with the financial accounts. We are not considering the next year revenue as a revenue in our income statement. We are considering only the revenue we have already earned, already we have realized in our sales for the last 12 months, right? And other people, Shwadi, choose D. So there is no legal requirement to produce management account. This is the very basic part, right? I think that answer for the other question, right? Okay, sorry. Right. So most of you choosing the correct answer. And let's see, we can do 1.6 also. Yes. Which of the following statements about management accounting is fee false? Right? The wrong statements. Reports relate to what happened in the past. Is it management accounting? May be made public. Maybe we can release to public or not. Maybe means not 100%. Right? So it gives up-to-date reports which can be used for controlling the business. Is it management accounting? So what is your answer from this? You can choose A, B, C, or D. What's your answer? So Fasmi is choosing B as an answer. Vidurshan is choosing D as an answer. Abhi is choosing B. Netra is choosing D. Shohel is choosing B. Okay. So I can see B most of the people, but D also. Okay, let's see. The first one is, guys, reports relate to what happened in the past. 100% that is not a management accounting. Reports relate to what happened in the past is all about financial accounting, not about management accounting. So in the answer set, if we have Roman number 1, that is not our answer. So A is eliminated, B is eliminated, D is eliminated. You see how we are picking the answers. If the Roman number 1, we know 100% it is wrong. So if it is in our answer, it is not an answer. So A is eliminated, B is eliminated, D is eliminated. So the answer is what? Simply it is C without saying, right? No, right? What has happened? So, okay, sorry. The answer is about false, right? Which of the following statements about management accounting are false? So, reports related to what happened in the past should be in the answer, right? So, the question asked false. Sorry for that. So, false means in the question, in the answer, the reports related to what happened in the past, if it is not, it is not an answer. So, may be made to public. So, we can 2 and no. Okay, let's see. Reports related to what happened in the past, it is false statement. So the first one should be there. So C we can eliminate here because first option is not in the false one. So we can eliminate the C as an answer here, right? So C is not an answer. So student, this is how you have to think, okay? C is not an answer right now. Okay. Then may be made to public. Yes, our management accounting. Sometimes if we prefer, we can make to public, otherwise we can keep it as within our organization, right? So that seems okay. Gives up to date reports which can be used for controlling the business, right? So up to date reports which can be used for the controlling the business. Up to date means what? Up to date means what has happened, it is updating. That is not management accounting, my dears. Management accounting is we are preparing for the future. That is not an up to date report, right? So up-to-date reports means we have planned something and we are updating with the results. Then we are doing some controlling purpose, means it's mostly related with the financial accounting thing. So the third one we cannot consider. So if the third one is there, so then we cannot consider that as an answer. So here we can eliminate the D also. And the third one is B. So the only option is we have A. What is that? Reports relate to what happened in the past is a false statements. And may be made public, that also as a false statements we are considering, because some organizations, as I told you earlier, they might make the statements public, but 99% of the organizations, they are not going to reveal their management accounting to the public. You understood? They might have the option to give that report to the public, but 99% of the organization, just think about, management accounting is all about future, all about strategic, right? If you are going to share your cost details, how you have calculated the cost, how much you have paid for the raw materials, per kilogram, how much you have chosen, who is your suppliers, how you are getting the reliable suppliers, right? So if you are going to give this information to the public, your competitor will get it, right? Then it is going to be a huge trouble for you. So guys, this question is very tricky, but it has to be very, very well tailored, this question. May be made public? No. Management accounting is internal. As we have studied, management accounting, the main users are internal managers, not external people like competitors or customers. They don't know, uh, they don't want to know our details about our cost classifications, how we made the decisions. No, they don't need that information. So maybe made public, it is 100% false statements. And report related to what happened in the past also false statements. So 1 and 2 we can choose as a false. But the third one gives up to date reports which can be used for controlling the business. Even if it is related with the financial accounting thing, up to date reports means updated reports. So we can consider not a past data up to date, we can consider as a timely report here. That is how the question is set. The question is set, gives up to date reports means the latest data, right? So we can use for the controlling the business. So that we can have as a, so the correct answer. So the 1.6, the answer is going to be what? What you can choose? A little bit tricky question, but we can manage it. So what is the answer, guys? What is your answer? The answer is A. So the lesson is in this question. We are not going to make our management accounting reports to the public. We are not going to make. And management accounting is not a report related to the past, but management accounting, if we have up to date reports, we can use that report for the controlling the business purpose. So this is the lesson learned from this question, right? And let's move and let's see whether we can do this 1.7 also. Which of the following do management accountants provide information to management? What is the answer? Which of the following do management accountants provide information to management? On cost of the goods and services, actual cost compared to the expected cost, expected profits, and production plan. So, what is your answers? Management accountants, they might provide the cost that is incurred for goods and services in the production. And actual cost compared to expected cost, what is that? If you are comparing our expected cost and actual cost, the variance analysis, the standard costing, yes, that is management accountants information. And expected product profits and production plans, how much our profit for the next year we are expecting, how much units we are gonna produce, how much resources we need. These all are management accounting stuffs, right? These all are management accounting stuffs. So the correct answer is going to be the D, right? And 1.8 also we can do this question. Which of the following statements about financial accounts is correct? Forecast will always provide a good source of data for the future cost. So the same questions type. Already we did, right? Forecast will always provide a good source of data for the future cost. Future cost. Here they have mentioned future cost. Always also there. Financial accounts provide the best source of data for the historic cost. Are designed to meet the requirements of people inside the business. Financial accounts. And financial account is not a legal requirement to produce a financial account. What is your answer? First, me, Shubhashini, Netra, Vidurshan, all people are choosing B as an answer. Financial accounts provide the best source of data for historic costs. That is correct. So others are wrong. Forecast will always provide a good source of data for the future cost. So you are choosing as a wrong A answer. And most of the people choosing C are designed to meet the requirements of people inside the business. No. So financial accounting, not inside the business, external. So C, false. It's not a legal requirement to produce the financial accounts. No, financial accounts are legal requirements. So C and D definitely not an answer. So we have to have the option with A and B. The correct answer is B, my dears, because forecast will always provide a good source of data for the future cost. No. Why? Because good source of data means it's reliable, timely, we have the knowledge. But we cannot consider always, because sometimes the forecast say 20% demand will increase, but in future we might have a reduction in the demand. Sometimes we have a plan in the forecast, we will increase 20% of our prices, but in actual situations we have to reduce the prices, not increase the prices. So we cannot say the future cost a reliable solution, a good source of data as a forecast, because forecast is only future based. So we cannot have the good source of data for the future cost. So that's not an answer. But the actual correct answer is financial accounts provides the best source of data for the historic cost. Right? Always, the word always is very critical. So that's what the A is not considering as an answer. It may be, not always, because the future is changing, right? So 1.9, this question also we can do. Which of the following is not a type of information? Which of the following is not a type of information? We have seen types of information. Just now we have seen strategic, relevant, operational, tactic. Not a type of information. What is your answer? Zumri, Zuha, Yadartana, Vidurshan, Shwadi, Shuhail, Subhashini, Shahida, Ishfaq, Netra. So Shahida is choosing B. Shubhashini is choosing B. Yes, relevant, right? Relevant is a quality of a good information, not a type of information. What are the type of information we have learned? Strategic level information. Tactical mean middle level. Operational, lower level information. That's how we have learned. Relevant is a quality of good information, not a type of information. So the actual answer is going to be B. Very simple question, right? And let's see, we can do, yes, 1.10 also we can do. See, choose the correct word to complete the two sentences below. Is the raw material for processing, data or information, has already been processed in such a way to make it meaningful to the person who receives it? Is it data or information? What is for A, what is for B, guys? So Ishfaq, there are question, is BL6 containing calculation part because exams are MCQ basis and the exams are conducting in paper based or computer based? So Ishfaq, your business level 1 and 2 from the existing syllabus, it is computer based exams. Every month you are having exams. Even on your new syllabus that is going to affect from September, that is also computer based, not a paper based exams. And you are not only going to have MCQ, that is OTQs, like fill the blanks, right? Choose the correct answer, drag and drop, connect, like that questions. And also BL6 containing calculation part. For this part, it's only an introduction to management accounting. They cannot test any calculation part. So here I have chosen only questions from your revision kit that is related to your chapter 1 only. In the future chapters, we will have the calculation part. We have the questions also, right? So most of you choosing the correct answer, data and information. As you know, guys, we have just now seen that one. The raw data, not a process data, is data, and information is already processed in such a way it make it meaningful to the person who receives it, right? So the A is going to be the data and B is going to be the information. This is very easy question, right? And the 1.11 also we can choose. See the question, which of the following statement is true? Strategic tasks are highly structured. Operational tasks are short term in time scale. Technical information is mostly external. Operational plans are implemented by top level management. What is the true? Yes, exam time is 2 hours. I think so, if I'm not mistaken. So, what is the true? So, Fazmi is choosing A, Abhi is choosing A, Vidushan is choosing B, Shahida is choosing B, Kavita A, Atifa A. Right. So, the first one, guys, let's see whether we can eliminate some answers or not. Operational plans are implemented by top level management. Is it? Operational means it is in the low level, daily task. It is not gonna implemented by the top level people. It is by the low level people. So that's a false statement. So we cannot consider as a true answer here. So we can eliminate the D option. And technical information is mostly external. Is it? Is it that we have learned? What is in our technical information? Here, see, technical informations, medium term, right? Medium term and middle management, productivity measurements. The features are mainly internal. See, mainly we are having this information from the technical, because our per machine hours rate, per machine hour output, we cannot get it from the external people. That is in our factory, right? So this technical information, it is not mostly external, it is mostly internal. So C also we can eliminate, right? And operational tasks are short term in time scale. Is it correct? Short term is operational task we have to finish within 1 day, within 1 week, within 3 months. Is it short term? What we have learned? See, operational, day to day management, short term execution. Here I can highlight the word if you want. Short term execution. We have to execute this task and achieve it within short term. And internal, very detailed, task specific, immediate, frequent update. Right? So, for this question, operational tasks are short term in time scale. Is it correct? That seems correct, right? That seems correct. We cannot eliminate it. So, then what about the A? Strategic tasks are highly structured. Highly structured means what? They have structured everything. Very detailed manner. Is it strategic task? See, strategic task, long-term objectives, overall organizational direction used by the senior management. It is internal and external origin. Summarized. Here, see, summarized. It is not a well structured. It is a very summarized. And organization wide at a high level. High level means very high level people, they don't read 100 pages of reports. They are not going to have some, very detailed approach. They will simply say, I want to increase 50 percentage of the sales revenue from previous year. Right? They are strategic information. They need the information. I want to increase 50 percentage. Right? Now we have a 50 million. And next year I want to achieve another 50 million sales. But they don't know how. That is strategic level, my dear. Very high level. Organization wide. They don't know which department they are gonna make the sales, which product they are gonna introduce, which product they are gonna eliminate, which loss making department they are going to shut down, which people they are going to hire, which regions they are going to acquire, which new markets they are going to explore, what kind of marketing they are going to do. They don't know anything about it. That is high level. The high level means they will just say their long term objectives. Then in the middle level, we have to make it tactical. Then the low level, we have to implement it. So, high level strategic information are not structured. That is not structured. They don't know how they are going to achieve. They are not structured, but they have a plan. That is their overall objectives. So from that objectives, they will ask the technical middle management team to make plan. To implement that plan, they have the lower level operational level team. So in the high level, that is not structured. But the lower level, it is very structured. How to operate the machine, right? How many sales per day we have to achieve, how many customers we have to call. So that is very structured. So only in the operational level, it is well structured. Tactical level, a little bit structured, but strategic level, it is not structured actually. Okay. So that's how you have to think. So strategic tasks are highly structured. No. They don't have very detailed information. They have the idea, they have the plan. It is highly structured in the low level. So the correct answer is going to be the B. That is, operational tasks are short term in time scale. Did you understand? Okay. All of you, did you understand, guys? Zumri, Zuha, Yadartana, Vidurshan, Shwadi, Subhashini, Shahida, Ishfaq, Netra, Rishantan, Vidurshan, Raditevi, Nazar, Rinosha, Adil, Kavita, Janani, Jamuna, Ilma. Okay. Right. And let's see whether we can do this 1 point. Yes, we can do this question also. Seb works as a supervisor in department B of TCO, right? So there's a company called T company, TCO, and she works as a supervisor in department of B. And he is looking at short-term detailed information about expenses in department B. So in his department, he need a very detailed information at a short term. Quickly, he need that information. And J, another person, he is looking at long-term loan options from various banks for the T company. So he is looking into the long-term loan options from various banks. So which levels of information are SEB and J working with? SEB is strategic information or management information. SEB is operational, strategic or strategic operational or management information or strategic information. Strategic means high level. Management means middle level. Operational means low level. What is the answer? The answer is B, my dear. Right? You have to consider very detailed information. It is in the low level. Right? If it is 100 transactions per day, those 100 transactions, very detailed information, we can get the low level. Management level, we cannot get it. Top level, we cannot. So very detailed information about the expenses of department B, and also in a short period or 1 month, 1 month or 2 month period, we can get it only operational information. At the same time, for the long-term loan options, that is absolutely, that is a strategic information. That is not even in the top tactical level. So that's what it's an operational information that is SEB is looking forward, and the strategic information that is J is looking. Right? So the correct answer is going to be the B. And we have to see this 1.3 only. For that, we have to learn some theories. Right. So let's come back to the theories area. Right. So this is Anthony's hierarchies of information, very important area, the levels of information. And the levels of planning and controlling, the last part. Operational, management, and corporate level. how we are gonna have the planning and controlling. Here, guys, as you can see, the planning, right? So planning means the importance of planning. It helps to avoid unexpected developments by thinking ahead, right? So suddenly we can't do something and suddenly we cannot expect some investments amounts. So first we have to think in advance, right? Think in advance. That is the importance of planning. So we don't need to have some unexpected developments or unexpected expenses. And it involves stabilizing some clear objectives, and it involves selecting some appropriate strategies to achieve that objectives. So the management, the senior management or the top level managements, so simply business as a whole, management, it operates at different levels. Why? Because they have to ensure the organizations achieves its objectives. We know the so much of objectives are there. So how they're gonna organize to achieve their objectives? They have to plan, they have to control, they have to take some decision making. So there are three levels, students, right? So systematic thinking, if you consider systematic thinking, encourages both short term and long term foresight, right? If you're gonna plan, you have to plan for the short term as well as you have to plan for the long term. So it forces the management to anticipate and prepare strategically, right? It means you have a plan for the 10 years. For that, you need the strategic planning. And for that strategic plan, for the 10 years, how much we have to achieve every year, every monthly, every quarterly, that is forces the management to prepare very strategically. So that's what the planning is very important aspect. So the planning, it involves setting some objectives, clear objectives, and choosing what is our appropriate strategies to achieve these objectives. So the company doesn't face surprises in the long run, right? For example, if you consider a smartphone manufacturer like Apple company or Samsung, so they have a strategic planning. What is that? The long term. So the Apple, they can plan to expand their market share in India, Africa over the next 5 years. That is a strategic plan, long term plan. At the same time, Samsung, they can have a plans to launch some foldable smartphones to differentiate from competitors. So that is their long term plans, the planning, right? So it encourages both the short term as well as the long term. So uh, the expand of next 5 years of Apple plan or the foldable smartphone in the next 5 years, that is a long term. For the technical, it means the middle level also, they can have a plan. What is that? Midterm means 1 to 3 years, right? So middle or technical planning means 1 to 3 years. For example, Apple, they can decide to set up some more retail stores in major Indian cities within 2 years. So within 2 years, they are gonna set some retail stores in India. So that is the tactical plan to achieve their strategic plan for the next 5 years. Samsung also, to achieve their strategic plan, like foldable smartphones, they can have the as investment in the research to improve the durability of foldable screens for the next 1 year. So next 2 years, that's a tactical plan. In the operational level, like daily, weekly, monthly, quarterly, every half a year. So the Apple, they can schedule some new iPhone production cycles every September. They have the event, right? So that is operational planning. Samsung also, the factory managers, they can plan the daily production targets. So this is a systematic thinking. It can be in short term as well as the long term. So it forces the management to anticipate and prepare for strategically. So that's something planning. And controlling means you have planned, you have organized, allocated the resources, you have lead it, right? You have given a proper leading guidance. Then now time to control. Control means, okay, initially I have planned, I have organized, I have lead, right? I led them. Now, what do you achieve? Did you achieve our planning? What is your feedback? So the purpose of control, it ensures the actual performances aligns with the planned performance. So the control, it ensures that actual performance, right? Actually, what has happened, it aligns with the prior planned objectives, right? So identify the deviations and take some corrective actions. That is the purpose of control. So there are stages of control. The stage one is operational comparison. Like Regular and continuous comparison of actual versus planned performance. Initially, what we have planned and what we have achieved. That's a regular continuous comparison. And immediate corrective actions when deviations occur, right? When our planned activities are deviated from the actual, we are running low in productions, in marketing, in sales, we have to take some corrective actions. And strategic review, it is reviewing the corporate plan, the 5 years, 6 years, 10 years plans in response to performance comparisons. So adjusting the plans based on the external factors like competitors, what they are doing, government policies, what is coming. Because we have planned for the next 10 years, but we don't know what our competitors are going to get on. So ChatGPT, they doesn't think DeepSeek is coming. But it's sudden. Suddenly they have come as a competitors. And government policies, no one know. So according to that, we have to suddenly adjust our strategic review and prevent serious long-term damage through timely adaptations. We have to adapt for current technologies. So there are stages. So operational comparisons in the low level and strategic review. Right? So I hope so. You understood. An essential relationship. Effective control requires planning, because if you want to control effectively, you have to plan very carefully. If you plan carefully only, you can control it. Planning without effective control is ineffective and pointless, right? Without a control, whatever you are planning, organizing, and leading, no, it's pointless. We don't know what we have achieved. And reporting for control, established firms should implement regular structured management reporting, right? So regular structured management reporting. And smaller firms might rely on informal or ad hoc information. Ad hoc means immediately when they need, we have to provide. So that's ad hoc, suddenly. So that is the reporting of control. And decision making, there are some essence for decision making. That's a fundamental roles of management. It involves choosing between alternatives. So we know management accounting is all about decision making. For that, we need cost information, other information, monetary information, and monetary. And the decision making process, in your study text, they have provided this chart. So this is the decision making process they are expecting from you to understand. The step one is we have to identify the goals, objectives, or problems. What is the problem we are going to solve? What is our goals or what are our objectives? And after that, we have determined it. The step two is identify the alternative solution. How we can achieve these goals or objectives? What are our options? So what are our opportunities which might contribute towards to achieving the objectives? Then after that, we have to collect and analyze the relevant data about the each alternatives, right? How much it costs, how much it will revenue. Then we have to make the choice or decision, state the expected outcome, and check that the expected outcome is in keeping with overall goals or objective. So we have to choose one choice from the alternative, right? Then we have to compare what is the benefit we are going to get from that. So that is a planning stage. So step one, identify the goals, identify the alternative solutions, collect and analyze the relevant data about the alternatives, and making the choice is all about plan. And the control is after plan, you will organize the resources, right? You will appoint some leaders and guide, right? So organization leading part is there. Then after that, the control part. Control means implement the decision, right? What you have achieved. Obtain the data about actual results. Actually, what has happened? And compare the actual results with the expected outcome, like variance analysis. Right? That is control part. So planning part, the step 4, control part, implement the decision, obtain the data about the actual results, compare the actual results with the expected outcome. So you have to know, sometime in your OTQ, MCQ questions, they will ask, they will give these steps and they will ask what is in the planning, what is in the control. So they might ask some question. And role of the management accountant, the supplies appropriate and relevant information. So appropriate information and relevant information, and understand the process to provide valuable insights. That's the role of a management accountant. And Anthony's views of management activity, as we already seen, the management activity is organized into 3 categories: strategic planning, tactical or management control, or operational control. Right? So strategic planning, it defines organizational objectives and strategic goals. It means in the top level. So it involves selection of products, right? Which products we are gonna choose, strategic goals, and market entry and profitability targets include major decisions like asset acquisition, mergers. Those are strategic plan. And technical control means we are going to ensure efficient and effective use of resources to achieve the objectives. So it involves resource allocation like 4Ms, manpower and materials, machines, and money. These are called 4Ms, right? And efficiency and effectiveness. Efficiency means optimal use of resources for a maximum output. We have to use least input to get the maximum output. That is efficiency. Effectiveness means achieving the outputs that match organizational goals. We have set the goals or objectives. When we are achieving, that should match our goals. That is effectiveness. So efficiency and effectiveness, the 4Ms you have to know. So that is the technical management part. And operational controls, it ensures tasks are executed efficiently and effectively. Efficiently means with the least input, we have to get the maximized output. And the effectively means we have to achieve our target that should match our objectives. And it aligns closely with the strategic and technical guidelines. And operational control characteristics are very frequent, detailed, task-specific, immediate actions, as we seen already, and often include unexpected and ad hoc tasks. Maintenance, customer compliance will become. For example, sales department strategic level is increase sales by 5% annually for 5 years. And technical annual sales quotas and resource allocations, and operational level weekly sales targets per sales representative. So these are not much important as we have seen already. So that is from Anthony's view. And management control system. This is very important exam area. So management control systems, my dears, is a definition is management measures and correct the subordinate performance. Subordinate means employees, right? Performance to achieve organizational objectives, right? So there should be a control system. So in that control system, we will track their performance. We will compare their results, actual results with the plans, and we will take some corrective action. So the management control system basic elements, planning. So we have to defining desired results, what we are expecting from the employees. That is planning. Then recording, stating efficiency standards or targets. We are setting, okay, every 1 hour you have to produce at least a 10 units. So that is the standards or target, right? And then implementation, executing and measuring the outcomes. So what they have produced, how many units they have produced in 1 hour. So executing and measuring the outcomes. And we will compare the actual versus planned. Then evaluation, assessing the differences, right? Variance analysis like that. Then we will do some corrective actions where we have missed. And the corrective action is implementation of adjustments as necessary. So these are the basic elements of a control system, management control system. And limitation of traditional cost accounting. The traditional cost accounting often unsuitable for decision making, my dears. Traditionally, what they have did is it is unsuitable for decision making because it provides misleading or irrelevant information like absorption costing. We are considering as a irrelevant. Marginal costing, that is a management accounting mostly using. In management accounting, we are mostly using the marginal cost basis because that is relevant. But absorption costing in the purpose of management accounting, it is unsuitable. And information for decision making must relevant and future focused, should incorporate uncertainty and risk associated with the future outcomes. And accurate decision making requires information tailored for specific future scenarios. So that is well good to do our question. So we have only one question left. So now we will do that question 1.3. That is about management control system that we have studied just now. So see, a management control system is a possible course of action that might enable an organization to achieve its objectives. Is it? Or a collective term for the hardware and software used to drive a database system? Or a setup that measures and corrects the performance of activities of subordinates in order to make sure that the objectives of an organization are being met and their associated plans are being carried out? Or a system that controls and maximizes the profits of an organization? What is your answer? Just now, I have highlighted a word also. Employees means subordinate. So management control system means a setup that measures and corrects the performance of activities of a subordinates, means employees. For what? In order to make sure the organization objectives of an organization are being met and the associated plans are being carried out. So that's why the answer is going to be C. It's not a system that controls and maximizes the profits. So congratulations, students. We have covered entire chapter 1 as well as the revision kit questions of chapter 1. So my plan is at least we have to cover one chapter in one classes, theories as well as the revision kit questions. So Kavita having a question, sir, I'm following CA from business level 1. I'm not an AAT finalist, so it's okay for me to understand this subject calculations here because you're focusing for AAT finalists. No, it's not a problem. Even if you're not a AAT pass finalist, but you are gonna do the BL6 exams in upcoming exams, you can do. Otherwise, if you want to make use of it in the future as well, you can join. No problems. The knowledge is everywhere, right? So I hope so. This class is very useful, and I have satisfied my students. I hope so. So please give me your feedback, my dears, in the WhatsApp group. So how was the class? So this is my WhatsApp number. If you are not in the group, please message me. And I'm eagerly waiting for your feedback. According to that only, I can adjust the class strategies and the methodology we are gonna produce. Okay. And that's it for today's session, guys. See you in the next session. Thank you all. Thank you for your love and support. Hope to see you in the next class. Bye.